Good evening, everyone. Good evening, and welcome to Beyond the Pulpit, where the host, of course, is my husband, John Lee, and he is running a little behind. So you are stuck with me on tonight until he gets here. We just want to welcome you to Beyond the Pulpit, where we're talking about things that a lot of times the church does not talk about. There are a lot of things, the Bible says that my people perish for lack of knowledge. There are a lot of things that we need to know, but it's not brought to us the way it needs to be brought to us so that we can be prosperous and successful the way God intended. He said he came to give us life and give us life more abundantly. And so, with that abundant life, there are things that we deserve. We deserve the finer things in life. And Christians are not meant to walk around broke, busted, and disgusted. And so on tonight, we have two wonderful men here. We have Adrian Dillon here, who is going to talk to us a little bit about finances and credit. And then we have Jamarcus here, who is going to talk to us about mortgages. Many of us are renting in today. And some of us don't necessarily want to rent. We want to purchase, but we don't know where to start. We don't know where to begin. We don't know what to do. And so we decided to have these young men come on here tonight to help us with the process so that we can be homeowners one day. And even if you own your home, you may just want to get your credit fixed. Nothing like credit. Credit can take you a whole lot further than a dollar bill, just like favor. So, with that being said, we're going to let Mr. Adrian Dillon come in and introduce himself. And if you have any questions, please put them in the comments and we will do our best to answer them on tonight. So, welcome, guys.
Thank you. Thank you for having us.
So, Adrian, we will definitely start with you. Tell us a little bit about what you do and how you can help us, because I think many people, young and old, uh don't have the opportunity of being able to own homes, or some of them not even able to own cars because we don't know how to get our credit straight. And then when it comes to getting our credit straight, a lot of times people they get the runaround. For
Mhm.
some reason it seems like when you're trying to do the right thing, you get run around in circles and you don't know, do I start here, do I start there, where do I start? So help us on tonight so we know what we have to do to just get our credit straight so that we can buy a car, buy a house, or we can go into the store and buy whatever we want to buy. Take our kids on a vacation. These are the things that a lot of us are not able to do.
Right, absolutely. Well, like you said, my name is Adrian Dillon, and I've been working in this financial education space for about the last 7 or 8 years. We've been able to help a lot of people just rebuild their credit, but most importantly, manage their credit, make better financial decisions so they can live in a space where they're not overpaying for stuff or being mistreated. We specialize in helping people gain their purchasing power back. It's really simple. The only reason why we're having conversations like this today is because about 25 years ago or so, cash was king. You could have cash, grandmama, big mama, and they kept the money in the mattress, or behind in the TV or something crazy like that. They just had cash. Well, there's been a paradigm shift in a financial paradigm shift. And now credit has become more important than a dollar bill. Hear me clearly. There was a time where you just used your credit when you wanted to purchase a car or purchase a home. Well, we're living in a day and a time now where your insurance premiums are predicated on your credit score. The neighborhood you live in is predicated on your credit score. You can't even get utilities without deposits unless you cross a certain credit threshold. And so some places even have where you're not even qualified for employment if your credit score is not above a certain threshold. So we're living in a place where your credit score has become more and more important. So now we're in a space
Yeah.
where we need to learn about our credit so we can master our credit so we can live comfortably and just make ourselves relevant in today's marketplace. And so we've been able to help people just get another opportunity with their credit, the recover. Life happens to us all. I'll repeat that. Life happens to us all. But I'm here to tell you that you have the power to recover. You just need to know what to do. And that's what we're here for. We've been able to help people get things like liens, tax liens, repossessions, foreclosures, and things removed off of their credit. Get this now. We're not saying we're giving you a license to be irresponsible. We're simply saying that we have a team of attorneys that's going to research all of those items and make sure everything on your credit report is reported accurately. Because believe it or not, we found that over 80% of credit reporting is actually false. It's not even true. And so you need to know your rights as a consumer. We help you understand those rights and we help you navigate that so that you can have the highest credit score possible. And then once we get that highest credit score, how do we protect it? How do we make sure we're not getting too many inquiries? How do we make sure we keep our credit cards in a space where it does the things that's working for us is don't turn into something that can negatively impact our credit? Stop co-signing for people. Be responsible for your own credit. Things like that we just need to have conversations about. So I have not seen a credit score so bad that we couldn't recover from it in about 6 months and put you in a space where you can do the things that you want to do. And I've seen people get homes and qualify for homes at high interest rates because their credit was bad. We want to help you get in a home where you're paying for the house, not necessarily for the money that you borrowed to purchase a house. This is not if you can get it, it's how you get it. The more money you keep, the better off you are. So if anybody's listening to me and you have some credit challenges, or you just want to restore your credit, or maybe you want to make some capital purchases, you can take my phone number down. And my phone number is area code 404 931 9571. I'll say that again. 404 931 9571. And you can just simply text help me, and I know exactly what you mean, and we'll get you the information that you need. Or you can reach out to the host of this fabulous show, and they can get you my information, and you can be in touch with me that way. But listen, I'm gonna tell you something. You have to get started today, because I really believe procrastination is the hindrance to destiny. You have to get started today. You deserve the best, and it all starts by doing what's right. Let's get you a fair shot. Let's get you a second chance. Let's restore your credit in a place that you'll never be in this situation again. Thank you so much.
And that is so important because many people are able to get things, but then maintaining it is a problem, And so that is phenomenal because we want to be able to not just get it, but maintain it and being able to get other things even after we get those things that we desire. And so, Adrian, we thank you for joining us on tonight. Did you have any questions for him? The host has finally walked in, but so I did put your information up there, and if anybody has any more questions or they want to get signed up, just let us know. You can contact Adrian, you can contact us, and we can get you connected with Adrian. But the main thing is get your credit right. It's important. That's something that follows you. It's just as important as your social security number.
Sure is. Hello, fellas. How y'all doing this evening?
Man, we're great. We're great.
Sorry about the tardiness, but life of a truck driver.
No worries, man. No worries. We definitely understand.
I've been at it since 2:00 this morning. I'm a little tired.
Oh, wow.
So I'm gonna get my train of thought together. So listen. I heard you say something one day how the church didn't tell us about they want our money, but they don't say nothing about us keeping our money. I put it to you like this. This is how my parents raised me. Take your money, put it under the mattress.
He just said something about the mattress.
Put the money under the mattress, save the money. You never have to worry about everything you want, pay cash. This was 50 years ago.
Uh-huh.
Now, it's a whole nother level.
Absolutely.
Don't nobody carry cash no more. Ain't no cash no more. Everything is online. One of the biggest things we got is this right here. Everything is on this. If you lose this, you lose your whole life. So I think it's important that we teach everyone about the importance of credit. And I believe she mentioned it a few minutes ago how we have to do better. And then how does it go?
When you know better, you do better.
When you know better, you do better.
Mm-hmm.
So what would you have to say to that about, I want to get me a house. I'm working on my credit as we speak. So what do I need to get started other than after I leave Adrian, I come to you. I want to get a house. So what's next?
Yeah, so that's a great question. And to reiterate, kind of like Mr. Lee was saying, 50 years ago, people used to do the thing where they would stash money under the mattress, save up, and, essentially just purchase everything cash. And with that said, I think it's fair to say that we can all agree cash is king, but credit is power. So with that, in today's world, realistically, cash isn't really going to get you too far. And at the end of the day, for me, it's about using your money in the most efficient way possible. So, for example, to your point there, Mr. Lee, say, for example, you stashed money under the mattress, you saved up $250,000 over the course of 4 or 5 years. You're going to go, take that 250 grand and dump it into one real estate property when at the end of the day, after the purchase, you're back at ground zero. Yeah, you know what I mean? You're back where you started. So the most efficient, or I think for me, the biggest thing is helping my people use their money in the most efficient way possible. And what I mean by that is, there's absolutely nothing wrong with stashing money under your mattress. I get it if that's how you were taught, if that's how you were raised, because I was raised the same way. I was raised by my grandparents. I didn't live with my mom, so I was raised with my grandparents, and they were pretty old school, man. So I definitely understand it. I used to have a little piggy bank back in the day. But the way I look at it is, if we're going to spend that much time saving up that much money, then let's try to find the most efficient way possible to make that money go out and work for us. You know what I mean? And that's where real estate can essentially come into play. You have $250,000 saved up under the mattress. You put 5% into one property, 5% into the next property, and so on and so on. Now you have acquired a real estate portfolio of 10 or 15 different properties where you're making money off of the monthly rents. So your $250,000 is working double time, maybe even triple time for you than you just going out and buying it cash and ended up in the same position that you were in the first place. So I think that's my biggest thing is finding ways to utilize your funds in the most efficient way possible. Now, whenever it comes to someone being able to, like you asked, trying to buy their first home. So first and foremost, as Adrian kind of highlighted, you will need to have your credit in order. And that doesn't mean that you necessarily have to have perfect credit. I don't want to try to step on his toes, but, from my standpoint, I'm not going to advise somebody to push their home buying goals off until they have a 700 credit score. At the end of the day, our minimum credit score requirement is 580. As long as you have a 580 credit score, I can get you into the house. Now, of course, there are going to be other stipulations behind that, like 2 years worth of income, money saved up in the bank as well. That way you can cover the cost of clothes and a down payment. However, at the end of the day, bare minimum requirement is 580. So as long as you have a 580 credit score, no major derogatory marks like bankruptcies, foreclosures, charge-offs, things like that within, I would say a 2-year span. As long as you don't have any major derogatory marks like that within a 2-year span, your credit will essentially qualify. The biggest thing that I run into when working with people is, for one, they get so hung up on, I'm going to have a better interest rate with a 700 credit score. The thing about it, and, I'm not saying that that's false. I'm not saying that that's true either. But the biggest determining factor at the end of the day, there is so many different factors that go into determining what your interest rate is. It's not possible to tell you just because you have a 700 credit score, you're going to have a 5% rate. You know what I mean? Things like the down payment, loan to value ratio,
Well,
go ahead.
No, go ahead. Go ahead.
I was going to say down payment, loan to value ratio, your debt to income ratio, your housing expense, your credit history, and the amount of assets that you have left over after the purchase. I mean, there's a full list full of things that get factored into building or qualifying you or getting you a qualified interest rate. So the whole credit aspect of it, I wouldn't necessarily recommend getting too hung up on it. However, of course, address what you need to address. That way, moving forward, you don't have any issues. But with our process being in the mortgage industry, it's not going to be, make or break, or, I need to wait 2 or 3 years in order to build my credit to a 750 because right now it's at a 600. At the end of the day, if you have a 580, you're good to go.
I got you. I hear some. I heard saying there's different kind of programs as far as getting zero down payments and such. You want to expound on that?
Yeah. And that's a good question. I'm actually glad you mentioned that. So one of the zero down options, of course, VA, if you're a veteran, you can essentially qualify for 100% financing, or you can go USDA, which is a loan backed by the Department of Agriculture. It's through the United States Department of Agriculture. And what they do is they actually guarantee the lender in case any default in case the borrower themselves default. So basically, with that said, and here are our company requirements, and what you'll find when you speak with different lenders across the industry is a lot of people will tell you, you need a 620, or you need a 580, or you might need a 500. There's a thing called lender overlays. And what that is basically, for example, I'm going to take the VA. The VA loan, for example, dealing with the Veteran Affairs, they technically don't have a credit score requirement. And a lot of people really don't know that.
Wow.
But the thing is, because the VA guarantees their loans essentially for the lender, again, against default, because of that, and because it's 100% finance loan, which means zero down payment, a lot of lenders are going to tack on their own requirements, which is essentially your lender overlay. So the VA, they don't have a credit score requirement, but because of the product and how risky it can be sometimes, our company overlay would be a 620. It's a 580. It used to be 620, but they recently changed it to a 580. So even if my veterans out there, if you guys are veterans, you can get a VA loan 100% finance with zero down payment and have a 580 credit score. Now, if you're not a veteran, you can look to go the USDA route, and like I mentioned, that's through the Department of Agriculture. With that, the biggest stipulation is you cannot make more than 110% of your area's median income. Or I guess an easier word, it would be the average median income for your specific county. So for example, you have a couple like you guys, the average median income, the household income. So this includes everybody in the household that makes income. So the average median income being, for example, let's say it's $100,000. You two, you make, for example, $105,000 together as a household. So you guys would still technically qualify to go the USDA route as long as you have a 620 credit score and we don't exceed the 110% of the average median income. So that's another zero down payment route that you can go as well. Now, with the USDA loan options, the property does have to be considered in an agricultural area. So like that's your farmlands, the country.
Like in a rural
in a rural area, exactly.
We got some of that land.
Yeah. And if you're like me, I'm looking for a 2 or 3 acre home. 2-story that I could have chickens, goats, cows, and stuff like
Yeah,
that.
but I understand. I mean, I've heard stuff like that, but I wasn't
Right.
sure how. You hear so much stuff online that you don't know if it's true or not.
Right.
I heard about the 0 down, and matter of fact, today I heard about what you just talked about.
The
And
USDA
I
option.
heard it on the radio. Yeah, I was like, wow.
Yeah.
But,
And the thing is, there are, I guess I should have mentioned this, there are first-time home buyer down payment assistance programs as well. But at the end of the day, it's not always the best option because, for example, like I mentioned this past weekend, I'm licensed in the state of South Carolina and Georgia, right? So I deal with both states. Now, South Carolina, they have their down payment assistance program through SE Housing. So I've looked into SE Housing because essentially, that's who I'm competing with, and I just have to know my stuff. So their down payment assistance requirements is you have to have a 620 credit score. You can't make a certain amount of income. And if you do use the down payment assistance, it's considered a second mortgage, and you have to pay it off within, I believe it was 10 to 20 years, which it requires you to stay in the home for a minimum of 5 years. So with that, USDA 620 credit score, like I mentioned, as long as you don't make over 110% of the average median income, you would qualify. And that's a 0 down payment loan option right there, which does not require you to be in that home for a minimum of 5 years, or it does not give you a second mortgage or a second lien position. So long story short, just because there are down payment assistance options out there, it's not always the best route for, specific people to take. And of course, at the end of the day, it is specific to the situation. So that's why me as the loan officer, I would want to have that upfront conversation with you, talk a little bit about your goals, get an understanding of what you're looking to do, whether it be 5, 10, 15 years down the line. That way I can position you in the right way.
Gotcha. I had some friends buy some, not repo, what they call it, foreclosed homes.
Foreclosed home. Mm-hmm.
Is that something that people still doing on a regular, or?
Oh yeah.
Is it easier to get a foreclosed home, or is it easier to just buy a new house or used house straight up?
Yeah, and that's a great question. So I think at the end of the day, to answer that, it would depend on what your actual goals are. You see what I'm saying? And what I mean by that is if you are already a homeowner and you want to go out and invest in real estate and you want to build a portfolio and, acquire a few rental properties, then yeah, in that position, I would recommend, hey, go look at some of these foreclosed homes. They're getting auctioned off. The starting bid is $5,000. You could get a home that's worth $150,000 for $5,000 from an auction because it's been foreclosed on. And at the end of the day, if that correlates into your long or short-term goal of being an investor and acquiring properties at a cheaper price, but then being able to sell them at a higher price, then that would fit the description and that would essentially be a good route for you to take. Now, on the other hand, if you're a first-time home buyer, you're looking to get into your first property, you were pre-approved for $280,000. And you have, 2 or 3 kids, you're a single mother or father or whatever the case may be, and you really just do not have time or money to put, the efforts into rehabbing this foreclosed property, cleaning it up, etc., then you might want to look into, an existing property already. That way you can go buy it and move in within the next 3 weeks.
Yeah, see, I'm the type of person, I can see what is. I can see what it could be. I will buy a foreclosed house in a minute.
Right. And I will too. I'm not saying, I'm not saying that
for me to
that
live
is
in, honestly, because I got people that can build a house from the ground up.
right. And that's perfect for your situation because you have those contacts within your sphere of influence. It's easy for you to access them, and you, to be honest, you may get a cheaper built home that's worth more than somebody who has to randomly reach out to a contractor and be like,
Right.
hey, I bought this home from a foreclosure. What's the estimate on me building this kind of floor plan?
Got you.
You see what I'm saying?
Well, I tell you what, man, it's been a pleasure. I would ask you put your info out here so people can get in touch with you.
Yeah, absolutely. If you guys, anybody out there who's watching, if you are needing help with getting pre-approved for your first home, your third home, or your next investment property, you can reach out to me directly to my cell phone, area code 843-338-0808. Again, that's area code 843-338-0808. Or you can send an email to me. My email address is jmoradel, MORADEL, at rossmortgage.com. And if there was actually, I can put it in the chat.
I was trying to type it as you were speaking.
What's that?
I was typing it as you were speaking.
Okay, gotcha. Well, I just put my phone number in the chat, and I'll put my email in the chat as well. Or if it's easiest for, sorry, I'm trying to type and speak at the same time. But if it's easiest for some people out there to get a hold of me through social media, you can reach out to me through social media as well. My name's spelled exactly how it's spelled on the screen. Jamarcus Moradel - Ross Mortgage Corporation. That's my business page. Or if you want to reach out to me directly on my personal page, Jamarcus Moradel. I'm pretty available. And I'm pretty responsive too. So I think one of the benefits of working with someone like me rather than somebody at like your typical bank, is there's not really, was that?
First is that personal touch.
Exactly. You get the personal touch. In addition to that, I do not wear multiple hats. People at banks, they worry about deposit accounts, savings accounts, credit cards, auto loans, mortgages, things like that, when I only do mortgages. Gotcha. I'm available whenever you need me to be available. I work when I need to, where I need to, so I can meet people, face to face or whatever the case may be. And it's just like you mentioned, you get the personal touch. Working with me, you guys, if you guys don't mind, I'm going to kind of expand on my process. Working with me, the first thing we would do is I'll give you a call, introduce myself, tell you, hey, this is Jamarcus Moradel, the mortgage loan officer that you contacted. I just want to talk to you today and find out what your goal is and see how I can help you. After we talk, I'll take that information, start working for you, get your credit qualified, get your income to qualify, and then make sure you have enough money to close on the deal. So essentially cover the cash to close. Once I'm able to get you qualified fully across the board, I can have your pre-approval out within a matter of hours, depending on, whether or not I have the full list of documentation that I need, which it's not much. It's your driver's license, 2 of your most recent pay stubs, 2 of your most recent W-2s, and then 2 of your most recent bank statements. As long as you guys can provide that information there, I can get a pre-approval done within a matter of hours. And once I send you out the pre-approval, then you guys can take it and go find that next property. So
what about the ones of us that work 1099s?
1099? Okay, great question. So with that, because I'm sure as a 1099 worker, there are a lot of deductions that you can do.
Mm-hmm.
So with that, driver's license, 2 of your most recent pay stubs, I believe, I think as 1099, you guys get pay stubs, right?
Mm-hmm.
Okay. So 2 of your most recent pay stubs. And then instead of 2 of your most recent W-2s, it would be 2 years of full tax returns. And the reason that we do it like that is because the amount of deductions that you guys are able to take off, at the end of the day, you know, people get smart, and these CPAs, you know, they're pretty smart as well, which there's nothing wrong with it. Your goal is to pay the least amount of taxes. So if you are paying the least amount of taxes, your CPA is doing a great job. However, when it correlates into the mortgage industry, we can only use taxable income. So if you're only claiming $4,000 or $5,000 of taxable income on your tax returns as a 1099 employee, then that would look like, you know, correlating into the mortgage industry, you would essentially have made $4,000 or $5,000 for that year. You see what I'm saying? So with that, I think as far as 1099 workers, you know, from that standpoint, I would just say that, you know, continue to try to reach the goal. Pay as little taxes as you possibly can. But if you are looking to get into or to go through the mortgage process, then for, you know, the next 2 years or so, if that is you or, you know, whoever out there is watching, make sure that you leave enough taxable income on your tax returns. That way it shows a sustainable amount of money per year, because, you know, that's what we have to use to qualify you.
I understand. Well, look, man, we gonna end this. You have anything else? We're gonna go ahead and we're gonna end this tonight. It was good speaking with you. And first of all, I want to say thank you to Adrian for coming on. He had a prior engagement he had to get to. So thank you again, Adrian, for coming on. Jamarcus, it's been a pleasure.
And I thank you for the information, because there are a lot of things that people who have VA information that they did not know.
Right.
You know, because some of the stuff that you shared tonight is information that I've never heard before. You know, and so you hear everybody talking about, I got a VA, but you know, the information is good and it's needed.
Right. And I'm honored to, you know, be able to come on your show and speak and, you know, give you guys this information. I know I talked about my little PowerPoint, but, you know, we'll have to get on another call to go over that.
Yeah, he did have a PowerPoint.
But it's all good. It's all good.
I'm sorry about that.
One thing I will say too, and I guess we can kind of end on this note, is you hear a lot of people, they talk about, you know, oh, I was able to get a 3% rate. I was able to get a 4% rate. You know, oh, why is your rate so high? Again, there's so many different factors that get there's so many different things that get factored into your mortgage rate that is legit impossible for you to be in the same exact situation as somebody else. So if anybody out here is watching this and they've seen those exact posts, you know, people saying that stuff, if they're going through the mortgage process now, do not compare yourself to somebody else's situation, because you never know what could be different. They might make more money than you. They might have a lot larger down payment. They might have, you know, a lower loan to value ratio. Their debt to income might be lower. You know, there's so many different things that you should never compare yourself to somebody else's situation.
I got you.
And the truth is, before we go any further, is we should never compare ourselves to anybody else anyway.
Period. Yeah, exactly.
I know we ain't supposed to be preaching on here tonight, but this is very important, because so many people are walking around depressed and upset because they've compared themselves to somebody else or somebody else's situation. And we have to truly learn to renew our mind. The Bible says renew our mind daily. we have to shift our mindset and worry about us and us only, so that we can qualify for what we can qualify for, because everybody's walk is their walk. What's meant for me and my husband may not be meant for you and your wife, you know what I'm saying, or vice versa. But we cannot take and compare ourselves and make ourselves feel like we're less than or we're not accomplished because we don't accomplish the things that we feel like we should have accomplished. And so that's very, very, very vital, not just in home ownership, but in our life across the border.
I agree.
Because
you're right.
Because you have a Mercedes and I don't have a Mercedes don't mean you're better than me. I mean, at the end of the day,
I might not want a Mercedes because I don't want no Mercedes.
I might want a Lamborghini or something.
About, you know, I mean, at the end of the day, and you know, it's funny he said that because I just want a GMC truck. It ain't no luxury car. It ain't, but that's what I want.
Right,
you know what I'm saying? So, you know, who's gonna tell me, you know?
Right.
If that's what my husband gonna buy me, but I mean, I just want a little GMC truck. That's all.
Right.
I ain't gotta have no Mercedes, but it does not mean that I'm not as successful as somebody driving a Lexus or a Mercedes.
Exactly, and that's the bottom line.
I'm still successful, but I got what I want because I'm not comparing myself to anybody else.
Right, and at the end of the day, you know, you got what you want, so you're happy.
You know, I got one other question before we go. I was thinking about down payments. So, say you have $40,000 down payment. Would that make it easier for you to be able to get a house, get qualified for the house?
How much?
Yeah, so
40,000.
So here's the thing with down payments, and I guess I'll try to circle back to your question. So the down payment is per guideline. So for example, FHA, their minimum down payment is 3.5%. VA, they don't have a minimum down payment. With conventional, you can qualify for a minimum down payment of 3%. But at the end of the day, your down payment, it will I'm trying to think of a way to word this. So of course, a down payment, depending on which loan program, is required. So at the end of the day, you'll have to bring a down payment regardless, depending on what kind of loan you're using. The thing is, if you're wanting to put more down, like you were saying, for example, you know, you buy $100,000 house using an FHA loan, 3.5%, that's $3,500. If you're wanting to put $40,000 down on that, then what that would do is it would essentially lower down your monthly payment, which could increase your buying power. But at the end of the day, the biggest determining factor in improving or increasing your buying power is going to be your debt to income ratio. So you can put as much money as possible down, as much money as you want down, but if your income cannot sustain the new proposed mortgage payment, then you wouldn't qualify.
Okay.
Yeah, still ain't gonna qualify.
Yeah. And at the end of the day, you know,
I still got a little old school mentality. You know, money talk.
And another thing I want to say is, you know, things like that's actually a great question, because a lot of people, they ask me, you know, okay, what if I put $70,000 or $80,000 down on this $120,000 house? And I'm like, okay, if you put $70,000 or $80,000 down, you're gonna have $70,000 or $80,000 less that you owe. Excuse me, Mike.
We understand.
It's okay.
Sorry.
They don't care nothing about no lie.
Yeah, no. But so kind of like what I was saying, to circle back is, you know, I have people come to me, they're like, oh, you know, if I put $50,000 or $60,000 down, will that increase my buying power by $50,000? Well, the answer is no, because your income cannot withhold a $50,000 increase and still qualify. So with that, we have to be strategic when trying to build up more buying power? Does this down payment correlate with this goal? Does this mortgage loan amount correlate with my comfortable monthly payment, right? You can't be comfortable with a monthly payment of $1,500, but then go apply for a $400,000 house. It just doesn't work out that way, because with the $400,000 house, you can expect the monthly payment to be a lot higher than $1,500. Right. And that's just, to be honest, that's just common sense. So with that, there are ways that you can lower down the monthly payment by putting more money down, so you have a lower loan amount, but that will not increase your buying power. Does that make sense?
That makes a lot of sense.
Yeah,
it makes sense. Like I say, I still have that old school mentality.
Think money just
money talk.
Nowadays, credit talk.
Yeah. No, and I get it. Honestly, it's like when
you go to college, they don't care how bad your credit is. If you got the right size down payment, you're gonna walk off the lot. You're gonna drive off the lot.
Yeah. And I think it's so crazy how some of the car lots out there will do that, especially the buy here, pay here lots. Oh my gosh, I've seen some.
Because them car notes, is like mortgage.
Yeah. I recently was dealing with a guy who his debt.
I got a buddy that own a buy here, pay here lot. So,
oh really?
Yeah.
So he's making good money. But we're not going to talk about that.
He's not right now.
Oh, okay, gotcha. Well, I was dealing with a guy who I was just recently dealing with a guy who was trying to buy a home, and his income was decently good, but he had just taken out a car loan or an auto loan where the monthly payment was $700, and I think it was like over $750. And I asked him, like, dude, what is going on here? Like,
I don't like new cars.
Yeah. And he ended up telling me, he was like, yeah, man, this is something that, me and my wife took out just because we needed an additional vehicle. I'm like, cool, man. Here's the thing. Because of the high monthly payment, the high note, that is absolutely destroying your debt to income. You have minimal debt. I think your credit card debt is less than $100, but you have a huge $750 car payment. So that takes your buying power from $200,000 to roughly $99,000. And in your market, you can't find anything like that.
And so that's something that that's not told to us. Like,
right.
We don't know that information, and they don't volunteer it.
Right. And with that, it's like, I understand you guys need a new vehicle. You guys got kids. You can't be crammed up taking the kids to, to school and things like that. So I get it. Life happens. But gee, a $700, a $750 payment. Golly. So
I can't see it.
Yeah, at the end of the day,
I bought my car from a buy here, pay here, and I made my payment a little high so I can get it over and done with quick.
Right.
And I was making the money, so it's paid for now.
Right.
But, I was making the money where I could just go ahead and pay it off.
Right.
And get it over with, because I don't.
And at the end of the day, that's the old school method, is you get it paid off as fast as possible. You're doing absolutely nothing wrong with doing that.
Mm-hmm.
I think that, kind of like Adrian was saying, with today's day and age, once you do pay that off, go out and finance another vehicle, or go open a credit card, go take out some sort of small personal loan and invest that money. What's that?
My best friend, he used to buy a car, and he don't fall in love with nothing.
Yeah.
Anything after 2 years, okay, I go trade it in and get me something else. So he got so upside down. I told him, I said, once you pay your vehicle off, this was a few years ago, I say, pay your vehicle off, and what you do, the same money that you was paying every month for a vehicle, take a year off and take that same money and put it up and see how much money you have.
Yeah.
And after he did that, he was like, oh my gosh, that was the best advice you could have ever gave me. He went out and bought another vehicle a year later and paid cash for it.
Right. There
With
you
that
go.
same money that he was putting up for a year.
Did he put that money in a place where it was gonna make money for him? Just
I guess whatever the interest account, bank account. Yeah, he put that money up. Yeah.
So with that, just imagine, for example, it sounded like he kept it in, a typical standard bank account. Imagine if he had taken that money and invested it into the U.S. Treasury or into, a 3 or 4 year note, where he would collect, roughly 6 or 7% interest on an annual basis. That alone, the returns that he would have made over that time frame, I mean, they would have been a lot more than what he had at his typical bank, because I know that the banks pay out, really low dividends or whatnot. Mm-hmm. But long story short, even with the case scenario like that, in today's day and age, people are still doing the same thing, but they're putting it in places where their money can work for them while they still live their day-to-day life.
Yeah.
Got you.
So,
got you. Okay, well,
that's
it's been very interesting, very informative.
Very informative.
Very.
I appreciate it.
Thank you so much, Jamarcus.
Absolutely. You guys definitely got to invite me back on here sometime.
Well, I'm getting to that.
We got to get you through your slideshow. I'm sorry.
No, you're fine.
God just told me that I believe we're going to have some kind of conference here, maybe sometime this year, a financial conference for the men. I mean, because you know what? Not just for the men, for everybody. Where, we come together and we have keynote speakers and help us work our money, get our money together.
Right.
Because a lot of us have that old school mentality where we just, like I say, put that money under the
mattress.
Under the mattress.
Yeah.
So.
Look, I know where to go look. Then let me go look at he got stashed up under there.
Right.
Yeah. So, at the end of the day, we're gonna have a conference sometime this year. I'm gonna work that out to where we do something on a broader level.
Okay.
I will bring you and maybe Adrian back in, and maybe some more realtors or something to come in, and we broaden this thing.
Okay.
Because it's needed.
Yeah, it definitely is. I agree with you. And with I think my biggest thing is, I'm not gonna lie to you guys. I'm pretty young. I'm 27 years old. And with the amount of information that I've learned so far with just being in the mortgage industry is astronomical. And I really, truly believe that I have a mission to educate our community. That way, we are able to go out there and actually compete in this world and close in on some of the wealth gaps that you see out there throughout the country and whatnot. So I am super on board with that. If you set something up like that, I'd be honored to participate in that and, give my little 2 cents here and there. So, yeah, that'd be awesome, man.
It's more than 2 cents.
Yeah. And it is. Our people really need to take the time to get the information that they need so that we can have better lives,
Right.
Because we can't live off of GoFundMe's and different things, So having money put up and being able to use your credit is very vital in this day.
Right.
Especially since we're not carrying cash like we used to. Everything has gone to
digital
transactions, Yeah. So it's like we got to get on board. We can no longer do what mom and them did. Grandmama and them did, because we're in a new day and things are continually advancing.
Mm-hmm.
And so we have to get with it, else we gonna be stuck in rut.
Right.
I think living with cousins and stuff.
Yeah. I think I think the biggest concept that people miss nowadays is, in order to get where a lot of people want to go, and the place that I want to go is financial freedom. In order for me to get there, and I've seen a lot of people out there who want financial freedom, in order for us collectively to get there, we have to learn how to leverage credit and other people's money. We will not reach, financial freedom, or, whatever the case that these people out here are doing. We won't get there if we don't leverage our credit, we don't leverage other people's funds, and we don't learn how to do it in a strategic, efficient way. So, to piggyback off of what you were saying, I agree. I definitely agree.
And it's right now, y'all, I'm sorry. I don't mean to preach, but that's just who I am. But it is so important for us to really be wise in this hour, because everything is going up except for the wages. And so if we're not strategic with the money that we do have, because and what triggered that for me today is when I got up and went to work, I took my goddaughter and her children to daycare. And outside the daycare, a homeless person was sleeping in the yard, and another homeless person was sleeping on the steps of the church. And then when I park my car in the garage and I walk to work, it's a homeless person that sleeps down up under the building. I walk by, and then I had to go to the bus station to take someone to the bus station this afternoon, and they were just kind of lounging. And it really triggered for me. It made me think, one, I'm grateful for the opportunity to do better, because some people found themselves in situations where they didn't have a chance to do better. So it's important when this information is given to us for us to take it and to grow from it and do better, so that we are not in that situation, or even our children. Because I watch some of the people at the bus station. I don't know if you ever been to the bus station here in Savannah, but it's really a sad sight to see.
Yeah, it is. It is.
And
it's not just Savannah, honestly.
And
it's a lot of places.
I've never really been, I fly.
Yeah.
To be honest, I'd rather get on a plane than on a bus. So I have never really been to a bus station, because, I just, but to even have the option to not have to get on the bus.
Right.
To be able to buy a plane ticket, or even put a plane ticket on a credit card. Right. These are the things that we talk about when we talk about getting your credit straight, because when things happen and you have to make a move, if something happened and you have to travel, or if something unexpected come up, you have to be prepared for that. And so many of our people are not prepared for those things. And so to see some homeless people, yes, they were, they did some dumb stuff and they found, but there are some people who really just never had that opportunity to do better.
Right.
And they couldn't find their way out. And because everything is going up except the wages,
right,
we gotta be strategic in what we do.
Right.
It's so vital that for me, it grieved me, because I'm like, wow, to just think that there's so many people now that's a paycheck away from being homeless.
Right.
So if we're not careful and wise, any of us can find ourselves in that situation.
Right. You're right. You're 100% right.
So putting your money somewhere where it can grow.
Right.
Wisdom. Taking the time to fix your credit. So if something happened and you can't work this week and you need to put some gas or something on your credit card, you got it to do it.
Yep.
We got people who are not able to pay bills, and people who are not able to buy groceries, and people who are not able because they never took the time to, we were never taught credit. Like for me, I didn't know nothing about no credit. When the people started sending credit cards when I got out of high school, I just started swiping. And
oh, you too?
Yes.
I'm pretty sure we all been in that same position.
Listen, it was so hard coming back from that, because now it's easy to mess up.
Oh yeah. Oh yeah.
But the fixing it's not so easy. You know,
Yeah.
and for me, I can be transparent about it. Look, I caught the devil trying to fix it. You know, I'm still not where I want to be, but I'm not where I used to be.
Right.
You know,
Right.
I finally was able to get a decent credit card with a decent, you know, limit on it. You know, everybody don't have that opportunity. So I'm grateful.
Right.
But I want other people to realize how important it is for us to really, when we know better, we need to do better.
Right.
And it is nobody's responsibility but our own. It's not his responsibility to make sure my stuff is fixed, and it's not my responsibility to make sure his stuff is now. As a couple, as one, we will help each other, but the responsibility ultimately is on the individual.
Right.
So we got to learn, we got to do better and surround ourselves by people who are going somewhere, not compare ourselves to anybody else, but surround ourselves with people who can help us and take us somewhere.
Yes, that is so true. I mean, I've been blessed to have my circle. My circle of people is homeowners, business owners, you know, that we all had some tie to where we was making money, where we was, you know, our credit was straight and we was doing all kind of things. And if you surround yourself with those type of people, the sky's the limit, I believe.
Yeah, because they're gonna hold you accountable. My one of my accountability partners called me today and was like, "You got where your goals? They written down, you know, like, let's get this going because it's time for you to shift, you know, and it's time for us to shift. You know, we need to shift and stop allowing life to take over and we take over our life.
Right.
That's that life. And I preach this sermon: are you living on purpose or are you just living? A lot of us have lived life. And life has lived us, but we haven't lived life. So we're in a day now where we're being able to be educated so we can truly live life and live life more abundantly. I want my abundant life. Shoot.
Yeah, me too. And I to piggyback off, and this will be the last thing I say, I promise. To piggyback off of that, you know, I get people all the time who come to me and they're like, you know, well, I never knew that I had to have a credit card to build credit. I never knew I had to actually use my credit to build credit. You know, I just wasn't raised that way. The system is not built for us. And my response all the time is, look, man, I get it. Credit can be complicated. At the end of the day, the biggest monthly payment that a majority of people have does not get reported to your credit, and that's rent. For somebody to have a system in place where it tells a story about your financial past, but it does not include the biggest, most important monthly payment that you have, that alone should tell you that the algorithms do not make sense. However, we cannot use that as an excuse. We have to use what we know and go from there. We know that in order to build credit, you have to use credit. We know that in order for you to get the best results, you're going to want to essentially have your credit utilization from 10 to 15%. A lot of people say 30%, but I like to say 10 to 15. We know that in order for you to avoid going into default, you have to make all of your monthly payments on time. So use that information and do what you have to do in order to get to the place where, like you mentioned, if you are in a jam, then you can turn and rely on your credit. At the end of the day, that's what you build credit for.
This is true.
Amen. Amen.
Yeah. So, it's definitely been a pleasure speaking with you guys, and I'm definitely looking forward to doing this again. Like I said, that was going to be the last thing I said.
We're gonna work together and do a conference. I'm gonna keep in touch with you, and I'll probably get you to work with me and put something together.
Okay.
So with that being said, okay, men, come Saturday, the 25th, we going bowling. Let's get out and let's enjoy ourselves.
That's in 2 days.
No women allowed.
2 days.
Leave your wife at the house. Leave your girlfriend at the house. Let her go do girl time.
Yeah.
We gonna hang out and we just gonna fellowship. We gonna be at the bowling alley in Pooler. Oh, I don't remember the name. I know my man is not around. I forgot the name of the bowling alley.
I will find out the name of the bowling alley and I will post it on my page because I don't know neither.
We will.
I guess we ain't supposed to know since we can't go in it.
So
makes sense.
Bowling on Saturday at 7. We're gonna. I'm looking forward to you guys coming out and we having a extraordinary time. And also have your mark your calendars for
June 24th. Men Pop reclaiming my position.
That is our theme this year. We are reclaiming our position.
Come on,
Us as men.
Yes.
We're gonna have to reclaim our position and take some of the stress off our women. Yes. Because our women are going through a lot. And we have fell off in even I'm a little guilty of that in some way.
Me too.
We have fell off and we have to take some of the stress off our women. And so come out on
June 24th. Listen, guys, it is so imperative for you all to come together. There is no need for us, you as men, suffering in silence. You got men that are coming out that are introverts, extroverts, like social, be socialized, some don't like. The thing is, you all have to come together and draw strength from one another. Yes. We do it as women and it helps. Sometimes just being in a circle of other men, having conversations will make you view things differently. Yes. It'll make you understand things differently. It'll make you see things differently. And when you're able to see things differently, you're able to shift and move differently. And so it is so important for y'all to come out on June 24th at 11 a.m. They will be at Sparkle Palace in Georgetown. We are having the awesome man of God, Pastor Ollie Richardson out of Atlanta, Georgia.
I'm so looking forward to this.
As the speaker. He is phenomenal. His church is called Recharge. I know it's Recharge something. Out of I want to say Jonesboro. I don't even know. I don't know. Yeah, I ain't gonna lie. I just know he's in the Atlanta area, and his church is called Recharge. He's on YouTube. He's on TikTok. He's on Facebook. He do what he called every morning breakfast with Pastor Rich, where he actually set it up like he's doing breakfast, but the word is the breakfast.
Right.
Pretty much every morning, I think about 7 to 8 o'clock, somewhere up in there. So you can catch him on all of those social media platforms. But when I say he is phenomenal, he is phenomenal. He is a young man and he is thriving.
I'm sorry, you said his name was Pastor Rich?
Ollie Richardson. They call him Pastor Rich.
Okay.
Ollie is Ollie Richardson. He is on Facebook. He is on YouTube and TikTok. Yes, and he is phenomenal. So y'all mark y'all calendars. Get y'all tickets. The tickets are $60, of course. Now, we was talking about finances. Let me tell y'all something now. Y'all get tight. People get tight when we talk about money. Okay?
You gotta pay to play sometimes.
You got to pay. First of all, he is traveling from Atlanta, so we want to make sure he's well accommodated. Plus, you're not just getting spiritual food, you're getting natural food. Y'all gonna have some shrimp and grits.
My favorite.
I don't know what else. Listen, what menu catering is going to be catering this brunch for you all? She is phenomenal. When I say she's phenomenal, she has been doing my event for my organization for the past 4 or 5 years. She's been with me. And so she is phenomenal. And she going to make sure y'all taken care of. She going to throw some stuff in there. She going to do some stuff. And when y'all leave, y'all going to be spiritually fed and naturally full. But more than anything, we want your lives to be changed so that you know better and you do better, because it is time for you as men to reclaim your position, to be the head of your household, to be that, the father that you're supposed to be the brother that you need to be the uncle that you need to be the son that you need to be. Whatever it is where you've lacked, it's time for us to come back and reclaim our position.
Yes.
I'm sorry. I
just for me to say.
It's in you. It's all good. It's in you.
I'm sorry. Listen, I guess that's why I got the title, honey. It's not just a title, it's a lifestyle. You
It
know, hey,
is.
I live
It
this
is. You're
every
doing
day.
what you love. You're doing what you love. So
So y'all come out and then get with him on Saturday. I will post that information. But guys, come on now. Y'all always going with the women. And I know it's been several times where I've had events for the women and the men wanted to tag along. Now y'all don't have to tag along. Y'all doing your own thing. Come out and fellowship. You'll be surprised. You meet some phenomenal men. And everybody has different personalities. Everybody has different perceptions. Everybody has different goals. Everybody's have a different drive. So you will definitely see somebody like-minded with you in the room, but it will definitely enlarge your territory by coming out and fellowshipping with the guys.
right.
Well, with that being said, well, it's been a pleasure. You enjoy the rest of your evening, and everybody, we'll see you right here next week.
Next Thursday at we'll post the time because you know, as a truck driver, sometimes that 7 o'clock don't necessarily be 7 o'clock. So between 7 and 8-ish, we'll be on.
It seems like they always want to see me on a long load on Thursday.
Every week. So I need y'all to set y'all notifications. If y'all set y'all notifications on YouTube, set your notifications on Facebook so that when we come on, you'll be notified and you can be right here with us next week. We love you all. Thank you so much, Mr. Jamarcus. We truly appreciate it, and we look forward to working with you.
Absolutely. It's been a pleasure. Thank you.
I will talk to you soon, and we will get this information together.
Okay, sounds good. You guys have a great evening.
Good night.
Good night. Good night, everyone.